All right. Bob, before we get started, let's just wait a couple of minutes for everybody to come on in. Good evening, everyone.
Good evening.
Just a quick update to all the people logging in. We're just going to wait 2-3 minutes to get started, giving everybody a chance to log in and the system, of course, to take them on. Bobby, you should start playing the guitar.
Can you see a guitar in the back room? I'm in the second office, the other bedroom at home tonight.
God bless the stay-at-home order.
Oh, it's crazy, isn't it?
You bet.
Yeah, I'll pick up the guitar. We'll jam out, then we'll talk a little investment.
Sounds good to me. All right, the number is kind of stepping down. We were expecting about 55 people. We're already at about 40 a minute in. So we'll just wait one more minute and we'll get started. I do want to be on time and respect everyone's time here tonight. This is going to be recorded and sent out tomorrow. As far as whoever is here tonight, you are going to have an advantage of getting all this information tonight. To take back, whether back to us or to your broker, depending on who you're working with and how you got here tonight. $703. All right, and we hit that magic number of 40 participants out of 55. So I am going to get started. Bobby, good evening. My name to everyone, and welcome everyone, of course, across the GTA. This has been dropped as of this morning at 11 a.m. to the broker, the Platinum Broker community. And as many of you in this webinar know, there was a teaser email that went out about a week ago, getting everybody set up and primed for tonight's launch to the investor community. My name is Simeon Papaelias. I am the co-founder of the REC group of companies. My director of operations, Bobby Pume, is an avid investor, a very hardworking person working on every single one of our data analysis on projects that does a lot of the due diligence in the back end, helping me be able to kind of put our stamp of approval on any project that we touch. You are here tonight to learn about a very exciting project in Hamilton. I am going to let Bobby just introduce himself a little bit and just kind of set us up for the evening as well. Bobby?
Thanks, Simos. I appreciate it. My name is Bobby Pume. I have a background as both an investor and an investor educator. It is absolutely my passion to be able to bring opportunities to people so that people can then push forward what their portfolios and thus their futures look like. I'm super, super excited about what we have going on with HarbourLife by LifeWise in Hamilton. And I mean, let's just dive right into it. What do you say?
Sounds good, my man. So again, good evening, everyone. We are going to get started on the presentation now. We are going to be discussing HarbourLife, which is the first project by LifeWise group of companies. They are a conglomerate made of Trisect Construction, which is a very long-term established company in the GTA. They are only one of two major construction companies that are authorized to work on the Greater Toronto Port Authority, both at Pearson and down in the harbor. It takes a lot to get that kind of certification, and that is one of the main partners in this project. They are also a commercial builder. That's what they're known for. If you want to check out their portfolio, head to their website. But they are the ones who built the entire commercial structure in retail inside the Ritz-Carlton in Toronto. So if anybody wants to know the quality of their work, if you've been to the Ritz and were impressed, that goes to show a mile. The operator of this retirement home is going to be Comfort of Living. Comfort of Living operates a dozen projects across southwestern Ontario. They have been certified and recognized in the United States by their sister company, another massive conglomerate. And they're going to be expanding their presence in the GTA by about 10 homes in the next 4 years. I believe, sorry, 12 homes in the next 4 years, if I'm correct, Bobby?
Yeah, that's exactly right.
So they do have a current portfolio and a current track record in Ontario, and this is the first venture with Trisect, and these guys are looking to do a dozen of these projects. To break this down of what this is, if you want to go to page one, Bobby, and just kind of get started on getting everybody acquainted to what this opportunity actually is. It is a 7-story building, 135 suites. It looks very, very much, this is actually not the actual rendering, it's an artist concept. Their final renderings will be coming out over the next couple of weeks. It's going to look very similar to this, which is why we used it. But it's actually going to be a red brick building, lots of glass, lots of fresh air, lots of light throughout the building. This is Hamilton's first commercial lifestyle project in the West Harbor. Pier 8 specifically is a completely, it's a massive $1 billion revitalization, which is literally 5 blocks down the street from here. This project is wedged between the brand new revamped GO train station and the harbor. It is the first commercial lifestyle infrastructure project, meaning just like gyms that are private sector that provide amenities to life in an area that's being revitalized, a retirement home, a bowling alley, all the things that make up quality of life. This is the first one in there. There has been significant applications and approvals. There's over 1,500 condominiums that are going to be built literally 4.5 blocks away from this building. And directly across the street, over 300 luxury townhouses are approved and are going to be built by Rosehaven, for those who know who Rosehaven is, in the residential sector. So the entire area of the West Harbor is being regentrified, and it's already halfway there, meaning that we're not selling pie in the sky. Demolition has occurred. Pedestrian walkways in the harbor are already in. Roadways are in. We were literally there last week, and it's brand new asphalt across. All sorts of development, all sorts of construction. You're more than welcome to visit the site. This specific site is located at 476 James Street North. Demolition of the current building that's sitting on site is scheduled for September of this year. Again, I think and I hope everybody on this call understands. I don't want to speak too much to Hamilton. Hamilton has seen an increase of capital appreciation in the residential market and commercial sector of over 150% in the last decade. It's actually spiked further in the last 3 years. And the reason for that is really quite simple. The GTA prices are pushing people out and making people take advantage of the spike in equity, buying at a lower price and sitting on a bank load of money where they can leverage it for lifestyle and or pass it down to their family. So the entire Hamilton, the entire region of that Niagara, the St. Catharines, the Grimsby's all present fantastic opportunities, this being one of them. If we can move down here, Bobby. This is some information. All of you are going to have this brochure. This is a caption from CBRE between the Canadian Mortgage Housing Corporation, who has a very detailed reporting and research facility around retirement homes. And CBRE is the second biggest data producer in the retirement home space in the asset class. You can find everything that we show here tonight can be produced for you to look over the original articles above and beyond the pretty pictures in the brochure. So if you're looking for links to this research, if you're looking for anything at all, please ask your broker or us, depending on how you got here, and we can provide everything to you. CBRE, this is just to go back quickly, Bobby. According to Stats Canada, the population of seniors aged 75 years and older in Canada is expected to grow by 100% between 2014 and 2034. So the next 20 years, we're going to see a double up of the boomers and the ones behind them getting into that age group. If anybody has any doubt as to the screaming demand and lack of supply in the retirement home sector, especially in Ontario, all you have to do is Google it, Google waiting list times for retirement homes in Ontario, and you're going to get your answers. So we don't need to go over any fluff or make any statements here. All of this data is so readily available. Next slide, please. Social responsibility. Again, not every investor values an investment only on the dollar value. In this case, this is a very lucrative investment, but it's also social and ethical investment. meaning you are going to be, via your investment, providing seniors housing in the private sector into a city. You're going to be putting in somewhere where people are going to live out their dreams in a setting that is both safe, state of the art, beautiful, in an area of the city that's only going to be one of the most sought after in the entire Hamilton region. So as we all know, the people who are going to live here are our parents, whether it's my parents, your parents, where our parents go to retire, and where they go to, live easier, where they don't have to prepare meals and do all the things that a big household in the city had them doing, is important to many people. And whether you're one of them, you will know, at least whether you're here for the money or you're here for the social and ethical component, you're going to make both a profitable investment and contribute into the fabric of a brand new built community. Again, we're going down the demand for senior housing. If you want to just move this along, Bobby, I think we've kind of hit that spot. For those who don't know, there's 4 major types of retirement homes: privately paid, which is what we're doing; government assisted living homes; and memory homes. As many of you know, as a result of the pandemic, the entire government assisted homes and was quite the wake up call for every citizen in this province, as they have been left literally to the forces of nothing, where the military had to go in and assess the situation fairly to know what they have to fix. In the private sector, things were extremely different, obviously. In our case, our operator, who is Comfort of Living, and their CEO, who is Sam Riyad, is extremely proud to announce, and again, this can be verified via the big bad web, Google it, not a single outbreak across the 12 homes that they manage. And that's not a coincidence. Who goes in, how they go in and out matters. Where your parents live matters. What happens to them inside these homes matter. And that's where that whole social and ethical thing comes in. The reason profits are to be made is because when you provide the society in a community a platform where you have a safe harbor, it's state of the art, HVAC systems, independent air, tons of light, those are healthy environments, and you can charge a premium for someone to live there. And this is the opportunity that we're creating tonight for our investors coming into this project, and this is what they're getting into. Assisted living homes, whether they're private or government, those are the one where the residents require assistance, meaning full-time nurses, etc. This home is not that. Both the developer and the operator are planning on getting into this market as well, and we will keep all our investors focused on future projects because those are extremely lucrative as well. Bobby, just the last type of home is a memory home, and those are the ones that are specific to Alzheimer's, dementia. Those are extremely specific and carry a lot of liability. Comfort of Living and LifeWise will not be going into that sector because of how highly trained and specific they are in those types of environments. They simply do not have the bandwidth based on the demand to get into a sector that has that much liability, or to put that liability onto its investors. The investment timeline. So what does that mean for everyone here? We're going to get a lot into the nitty-gritty here. So basically what you're doing tonight is you're going to have the opportunity to put a reservation sheet into buying a suite in this building. This is not a residential building. You or your family will never live there because you own it. You are buying into a commercial practice, a commercial building that is going to have ownership in the business for the first year before you get exit, and we'll speak to that. But today you are putting your down payments to buy a regular commercial condominium. The deposits are extremely stretched out, and we'll get into the mechanics of that. Bobby will be explaining those last 3 big slides tonight. He'll be going over exactly what the requirements are and how they've been put together. I'm really going to take you through the mechanics of the actual investment. So today and over the next 3 years, the only thing you are doing as an investor is placing your deposits. That's it. In 2024, you're going to take possession of your unit, which means you're going to close on it. You're going to put your last 5%, totaling 25%. It is a commercial investment. That is the bare minimum for any commercial investment. You're going to put your last 5%. You're going to have a mortgage, you're going to close on your mortgage, or if you pay for it cash, you're going to pay for it cash, whatever your situation is. The next 12 months is what makes this investment unique, what makes this stable, safe, and of course, what we believe to be an excellent investment. From the day that you close 3 years from today to year 4, you are going to be under a management agreement with the asset manager. So your tenant is a multi-million-dollar company that manages homes. During this time, for those who don't know commercial real estate, it's a triple net management agreement, meaning that you do not pay commercial liability insurance, operating business insurance, property taxes, common area maintenance, CAM, or better known to residential investors as maintenance or condo fees. You pay nothing. Your tenant pays that. So you have absolutely no carrying costs. But I did tell you that you had a mortgage. So who pays for that mortgage? The answer is they do. So no matter if you need a mortgage or you don't need a mortgage, they're going to give you a fixed payment based on your down payment structure, meaning that your 75% mortgage, per se, amortized over 25 years at a 3.5% interest rate, which is a commercial going interest rate, is going to be paid to you monthly. Whether you got the mortgage or you didn't get the mortgage, whether you got a mortgage at 2%, 1%, or 4.5%, you are going to get the payment every single month of that mortgage at a fixed price, which will be in your contract in every single APS. Nothing I say here tonight is not in your agreement of purchase and sale. It's going to be a fixed payment during those 12 months. So you will literally have absolutely no carrying cost whatsoever. For those lucky ones who can pay for it cash, they're actually going to make an extra 3.5%. So there is $0 in the red. For those who invest in Toronto condominiums, we all know that they're all negative cash flow, but we make money on equity. For this specific investment, your equity component is fixed because we're going to speak to that. Your mortgage balance coming down is fixed because we're going to speak to that. The deposits that you put into this investment are actually going to be earning you interest, and we'll speak to that. At the 12-month mark, you are going to be exited, meaning that the asset manager and the developer are going to be refinancing the entire building and buying every single one of you out of this investment. And hopefully at that time, should we do a marvelous job, carrying you straight into the next HarbourLife project, to the next, LifeWise project, wherever it may be, whether it's in London, Ontario, Woodstock, Paris, Tilsonburg, up north, all the sites. It's up to us, the commercial brokers, to find them, find where the need is, and get the investors through. So thank you, Bobby, for going. And then, just to the timeline, by 2025, you're out of this investment. And those 4 crucial questions that every single investment in real estate has. And I'm just going to tell you right now, what is the investment and what is my risk? How much money do I need? What is the cash flow? What is the risk? And when do I get my money out? On this specific investment, you have answers to every single one of these questions. And not only do you have answers, you have contractual paperwork to take you through the entire process. So nothing I spoke here tonight is actually left to chance. For all of those who are following so far, and if you have questions, please use the QA section of this webinar, because we are going to address every single question, and we will be here for as long as it takes for every single investor to have their question answered tonight. We are not too busy. We are not too proud. Any question you may have, there is no such thing as a bad question. Bobby, do you want to take us to the performer? Or do you want me to?
Yeah, I would be happy to. You've done a wonderful job already out elaborating on what sort of associated costs there are. If everybody can bear with us, I know that numbers can be dry, but as an investor, these are the single most important things that you need to understand. We will get you to what some of the incentives and the pricing is. We'll also get you to that important factor of when your deposits are due at the bottom of both this sheet and then another sheet coming up. But to roll through what this here is, this is a pro forma for one of the units at HarbourLife in Hamilton. This particular unit is a
Sorry,
369.
Bobby. May I just quickly add this rendering here is a far closer representation
Yes,
than what the
yes,
building is actually going to look like, but because they weren't finished, the renderings, we didn't use it for the pretty brochure, just so everybody knows.
that's absolutely true. So similar, close, but not quite the same, right? From the top down, you'll notice that there's a monthly gross rental income of $1,363 on this unit. That very much represents what the mortgage payback assurance is from the builder themselves. As we move down the sheet, as a HarbourLife Platinum investor, there are no additional costs to you. Simeon's already mentioned that a couple of different times. So there'll be no CAM, common area maintenance. There is no insurance for you to pay. There is no property taxes. All of these things are wrapped into one investment for you as a platinum investor with us or your broker this evening. That means that $1,360 or so is what you will be paid on a monthly basis from the developer to cover your mortgage. Let's break there for just a second. The caps, if you will, on what that mortgage is a 75% loan to value, okay, 25-year amortized, 5-year term mortgage at 3.5% interest rate. This will be a commercial mortgage. Simeon has been working diligently with some brokers that we have tremendous access to in the GTA in order to make sure that we can find rates of this nature for anybody who's going to invest. Okay. What we're seeing currently is rates in the commercial side anywhere between 2.1 and 2.75%. So we're very confident in what our numbers are today. As he mentioned before, if you were to pay cash for this investment, the whole $370,000 in this case, you would be receiving a check for that mortgage at 3.5% or 1363 in this case. If your mortgage, if you had to go off and get a mortgage and it was at 4.5%, you would in fact be responsible for the delta in between. So keeping in mind, everyone, that number is probably a couple of $100 that you may be out of pocket because you are being paid up to 3.5%. So we're talking about percentage points on what is a very, very attractive number in real estate in the GTA as a whole today.
And that's going to depend on everybody's ability to borrow. So just like residential real estate, if you have great credit, you can't buy this in only a corp. Like many people think, it's not the case. Anything that has a pre-construction component to it, you personally have to be on the investment as well. So can you buy it in a corp? The answer is yes. You would put it in 123 Ontario Inc. And Simeon Papa Elias would be the buyer. On closing, I would give my what's called a direction of title to my lawyer, saying, in my case, Sean Dandywall is my lawyer. It'd be Sean, please close this only on the Ontario Corp. Remove me from title. So you can close on it with a corp only, but you cannot buy it today with a corp only because the construction financing and all the financing that the developer needs to build it does require a real human being to be on the contract. Go ahead.
Exactly. This is very much built out to be just like any other pre-construction investment. Anybody that's worked with us in the past knows that we sell a ton, for lack of a better term, pre-construction investment. And it's the exact same case in this regard. So moving forward, you'll see under list price and passive appreciation, your down payment is accounted for in the pro forma, the mortgage amounts, and all of the associated fees. Moving to the right-hand side, under cash required to close, this would be all dollars required for you to close on your investment. So Simeon and I have worked diligently in order to encapsulate in one form what you would be out of pocket leading up to registration or when you close on your unit. Those things would include your down payment, HST, which I will circle back to, your capped development charges and closing adjustments at $4,500, land transfer taxes, legal fees, and legal fees at buyback. So circling back, I'd like to speak about HST for a moment. Simeon and I are not accountants in any way, shape, or form. But what you need to understand as an investor is that yes, you will be paying HST. And yes, that HST is wrapped up in what the price of the unit is. So there is no more HST above and beyond what you're paying at this point. That is the important thing to understand. There may or may not be other tax benefits associated with an investment of this nature. That will depend upon you and your taxable circumstances, for lack of a better word.
Because those are so personal to everyone, we have debated it, and we have made it an executive decision to not touch the taxation component. It is a commercial investment. HST does apply to all commercial investments, period. In this case, your APS, your agreement of purchase and sale, will indicate that your price, which is what you see on the screen and on any other unit, is inclusive of HST. So there is no adjustment at the end, is where Bobby is going with this. There is no more money. Everything that we have here is a 100% true representation of what your adjustments on closing will look like. How many dollars you will have inside, this investment.
I couldn't have said it better. I appreciate you, sir.
Cheers, brother.
All right. The other one to take note of is your cap development charges and closing adjustments. Okay. We've managed to cap those so that there are no meter fees that are going to pop up. There's nothing else, as Simeon mentioned. And because this is a fixed return and fixed term investment, what we've managed to negotiate with the developer is a lower than normal legal fee at the end of your fixed term. So there will be some legal fees at the end of this entire thing that you will be required to pay. Okay, that number is $1,500, CMOS, correct me if I'm wrong. Okay, but we've encapsulated what you would have to pay in year 4 of this investment here so that you understand factually and strictly today as all of the dollars that you will ever need to put into the investment. The lovely thing about what this actually is, you guys, is factually, this is what you're in and never out of pocket, even once, ever again. That allows us to move downwardly on the sheet to your return on investment. It is a net neutral cash flow investment. So unless you're purchasing at sub 3.5% with a mortgage or cash exclusively, you will see no cash flow. You will see your mortgage payment, but that should be a 1-for-1. Your principal recapture is a mortgage being covered by the developer themselves, the LifeWise group. That's represented here as 6.75%, or about $7,000 on this particular unit. Again, at a rate of 3.5% on the terms as we've discussed. Your contractual appreciation on exit. So what we've negotiated with the developer is a 2.5% increase year over year, okay, until you get to a 10% total return on the purchase price. So in this case, the purchase price is $669,999. Here, you would obviously see that represented as $36,999, or a 10% increase. That's what the LifeWise group is going to buy you back at your fixed exit date, which we'll discuss a little bit later.
Sorry, Bobby, did you say they're buying at 600 or 300?
600? What did I say?
I think
300, 690. Oh my goodness. It would help if I could read, I suppose. Right?
It is an equal 10%. It's you're buying at 369, or you're buying at 500. It's a 10% across. It's 2.5% a year, which is the typical and average appreciation of commercial real estate over the last 50 years. And they're putting that in writing. So that number that Bobby has put on this amazing pro forma, which is all encapsulating, is going to be actually in your schedule. I can't remember Schedule A or Schedule B of your agreement of purchase and sale. So again, just to mention, everything that you see on this page, everything that we're talking about is going to factually be in your agreement of purchase and sale. Go on, my man.
Yeah, while we're here, Simos, why not dive into real quickly why 2.5% is commonly what you're going to see in commercial real estate as opposed to residential real estate?
Yeah, so I mean, everybody here needs to understand the nature of investing. The residential market is a very different animal, and I personally invest in residential real estate as well as commercial. So residential real estate has been on absolute fire, no doubt about it, but it's also extremely volatile. Meaning that if the banks tomorrow morning or if the government wanted to intervene, they can do exactly what they did in 2017, where we saw Richmond Hill, all of York region go down by almost 30%, literally overnight. It cost a lot of people a lot of money, but for those who were able and patient and had literally the ability to carry on, it came back threefold, as we know today. That volatility does not exist in commercial real estate. In commercial real estate, this is a retirement home. The valuation and everything that goes with it comes from the profitability of the company and the profitability of the real estate. So you are investing in a sector that is able to put in writing a price that they know they can stand behind. They obviously feel so confident in their ability and their track record to put that in writing because they know they're going to make more. So if anybody here wants to compare this to residential and say, well, why wouldn't I put it in a residential condo down the street? The question, this isn't a comparable. This is a diversification, and this is for a conservative investor. This is for somebody who wants to be able to sleep at night and know what they're coming out with. If you're asking me, should you invest in residential in Hamilton today? The answer is absolutely yes. And both ourselves and the broker who brought you here tonight are going to be bringing you a number of opportunities over the next couple of years because Hamilton is booming and Hamilton is appreciating. So don't think for a second that you're comparing. Don't think for a second that the two investments can compare. A residential condominium cannot give you these assurances because they are subject to the winds of the market. In this case, we are at the winds of literally a tsunami of seniors coming over the next 5 years. And all of us in the retirement home sector know what that means for profits and for opportunity. And we hope that you see things the same way and join us for the ride. So that's where this is at. But should you buy residential real estate? The answer is absolutely yes, as well. just so I'm super clear. And please put your comments or your opinion in the chat. I would love to have a conversation about that after we're wrapped up.
Yeah.
Go on to the last beautiful piece of the interest on deposits.
Already some great questions in the chat. I'm excited to get there. Last but not least is that you will be earning 2% interest on your deposits as they are placed. Okay, for a total ROI, or what we would call a cash on cash return, so cash in, cash back to you, of 44.3% on this investment. We have gone ahead because it's a commercial investment and broken it down in more commercial terms as well. So your internal rate of return, or an IRR, is also listed here for you. This would help you to understand or measure your time value of the dollars inserted into the deal. As an investor, it is always best for me to put as little money of my own into the deal as possible. This is a chart that's going to show you what you're earning on the dollars that you place at any particular point. This is also the first time that you'll see what the actual deposit structure is going to look like. So I'm just going to run you quickly through it. We're talking about $5,000 on signing.
Bobby, may I?
Yes, sir.
So I'll let you do the deposits, but what I want to do is, because it's in reverse, it might be confusing.
Sure.
And so there's two things. I'm definitely going to have you run through the deposit structure, but for the time value of money, and for anybody who's trying to compute the difference between 44% and the IRR, if you were asked to cut a check today for $105,000, which is the total investment, and I told you that you're going to get your 105,000 plus 46,000 back, the return would be 44.3. If it was that simple, your return per year would be 10.5% per year. That's simple math. What Bobby is referring to is the internal rate of return and how to calculate the time value of money. He's referring to your deposits specifically, because the rest is peanuts. But your deposits are structured over such a long period of time where that literally more than doubles your actual return. Go ahead.
The deposit structure at HarbourLife involves $5,000 at signing and a balance to 5% within 30 days. When you look at the chart on your screen currently, that would be 48 and 47 months. If you reversed it, months 1 and 2, because this is a fixed term of about 48 months, okay, or 4 years. To the right of the number that you've deposited is the approximate value of what those dollars are worth to you at the end of the investment. And as you move downwardly on the chart, start of construction, 12 months later, another 5% deposit, and the dollars earned on that particular deposit are found one line lower. And as you move down the chart, that's what this explains. 28 months or during construction, another draw from the investors, your third deposit. The next deposits happen at occupancy and at registration, both at 5% to get you to a total of 25% into the deal. At each stage, we've broken down what your internal rate of return is on those dollars that you have put in, equaling outwardly a 23% annual return on your dollars, which is, Simos, personally speaking, just an incredible rate for the dollars that you're putting in, secured against real estate, sandwiched somewhere in between what a pre-construction investment is and what a rent-to-own is, realistically.
Yes. And I love the comparison. And for anybody, again, we've tried to take this slow. We've tried to be comprehensive. If you don't understand something and you have questions, it is your duty as an investor to investigate it. You can ask us. There is no more, there's nothing more we can do than show you every single step of the way, how every dollar is managed and how it's returned. We also talked about a fixed term. And I want to remind everyone that this is real estate. This isn't a bank where you can go cash your stock. So again, for all the amazing things that real estate does and is secure and stable and secured against bricks and mortar, and in this case, a business as well, you have to understand that there might be delays. So yes, we talk about 48 months as an investment, but if you've owned real estate before and been in development, in this case, a 7-story, 130 suite building is a small building. And we're talking about a very able and fully vertically integrated construction company. I don't anticipate this to be longer at all. They finished all their projects in their history on time, but can there be delays? No question about it. So if anybody is nervous about those things or about anything, just like any other condominium investment, make sure you understand what you're getting into with real estate investing. Make sure you speak to us or your broker that represents you and ask these key questions. We're not here to sell and schlep real estate. This is commercial real estate investing. We take our job and our reputation extremely seriously. So if you do have questions surrounding those types of things or how we calculate the IRR, this is what the chat is for. Our emails are available. Your brokers have the direct link to us, and they can get you anything you need. And I cannot mean that anymore. Where do you want to go from here? Do we want to just talk a little bit about the benefits of getting into this investment today, Bobby, the kind of the platinum level, what their brokers and what we can offer our clients?
Yeah, absolutely. So in the Google Drive that everybody will be reverted to after they leave the webinar today, are a set of assets that will help you to better understand what the investment is. There's frequently asked questions, which I hope that we can broach upon at least for a little while this evening. Okay, we're going to jump straight into the investor highlights or the incentives of doing this today. As I share my screen here, apologies. Is that easy enough to see, Simeon? Can you see that?
It's perfect for me.
Wonderful. So as we worked with the developer in order to get the investor what they needed in order to make this a successful addition to their portfolio, we identified that this could very much be like a traditional residential condominium purchase in most regards. So you'll notice that the investment does come with a free assignment. Right? That would be, what is it? Not inclusive of legal fees on the builder side. That's very, very common. You would also see capped charges. You'll notice that there's two versions of this: the development charges themselves, and then the closing adjustments, as I mentioned before, that will be the legal charges on the builder side for when you are in fact being bought out by the asset manager. The extended down payment structure is listed, as I mentioned before, on the previous sheet: 5,000 at signing, balance to 5% in 30 days, 5% at construction commencement, 5% during construction, 5% at occupancy, and 5% at registration when you have to get your mortgage. There's a bunch of questions floating around now. Yes, we believe that we can help you with that mortgage. We're working diligently to find lenders that will work with this particular investment. Everyone who's laid their eyes on it so far loves it. So we have very positive feedback in that regard. Moving down the sheet, your contractual assurances, we say that because they are built into your APS, or your agreement of purchase and sale. I stop every time just short of saying, what's my least favorite word in the world, Simeon? Guaranteed.
And we will never, we just will never use that word.
And we wouldn't.
We don't need to, and you should never, ever want to hear those words, or else you're not investing. And if somebody's asking for an investment and they can say guaranteed, then they wouldn't need an investor.
I couldn't have said it better myself. If somebody tells you guaranteed, you run for the hills. Fact.
Because there's always risk, no matter what.
Always. Which goes to answer some of the questions that are in the chat as well. What is the risk to the investor? And we'll touch on that briefly.
We'll get to it in a second.
But your contractual assurances here include the mortgage payback, as we've mentioned. Your post-close buyback agreement, that would be a schedule within your agreement of purchase and sale where the asset manager, LifeWise Group in this case, who already owns 35% of the building, they are only releasing 65% of the building to the general public for investment. They want to buy it back. They factually require the buyback in order to make their business as robust as possible on that end. They're just giving the investor the opportunity to get to that place, add something beautiful and meaningful to the community, which is why we touch so deeply on social investment in the beginning of the presentation. But that is also written into your contract, as well as property management, tenant placement, property taxes, and your insurance on the unit. So as I've mentioned a couple of times already, once your deposits and closing costs have been accounted for, you are never once out of pocket again, making this a very, very simple, straightforward, easy investment. I like to say that real estate is simple, it's just not easy. And then I came across what this structure could be, and it is factually simple and easy to get into. Next.
Thanks, Bobby. Do we want to share a little bit of the price list and the available suites? Do we have that?
Absolutely. So as I flip from screen to screen, excuse me here. I used to be better at this. How does that look to you, Simos?
I beg to differ, Bobby. Everything looks good, buddy. Thank you.
Wonderful. You will see prices in red starting at $369,999. That's for the smallest of suites. I did notice a couple of questions in the chat and the Q&A earlier about suite sizes. Those are found on this sheet as well. I want everybody to keep in mind that each one of the units comes with its own kitchenette. And inside of the building, because it is a seniors living, active lifestyle living building, there are also common kitchens. This is where the operator here, the comfort of living, comes in and makes sure that the tenants themselves are super well taken care of. Okay? So the units may look small, but all of the amenities of the building are also there to take care of who these people are and what they need. As I move down the list, you'll notice your deposit structure and all of the contractual assurances that we mentioned previously, from development charges all the way to your mortgage buyback, mortgage coverage and your contractual buyback. Everything is listed here. As I mentioned before, simple and potentially easy for most investors to get into.
Yeah, so I think to that, this is again a summary of everything we've talked about. Every single one of you will have access to every page that you've seen here today. And for the last time, I'm going to say that everything we talked about today will be in your APS or your what's called the agreement of purchase and sale and all the schedules. For anybody who does reserve a unit and goes into a contract, you will have a 10-day due diligence period. Some people know it as the cooling period. We don't use that term because the only thing we coach every single one of you to do during that time is not to cool off, but to do your homework and make sure that the deal is right for you. You weren't at a car dealership getting hyped up that you need to cool down. This is, again, commercial investing. It's serious investing. And everything that we've talked about tonight is something that you definitely need to cross your T's and dot your I's. And I do want to leverage the rest of the time that we have together to answer your questions. Bobby, do you want to hop on the questions and I'll do my best to answer them as quickly as possible?
Absolutely. So will the buyout price be fixed at signing, or is it based on market rate at the time of exit?
It is absolutely fixed at signing, and it's based on the 2.5 appreciation that we discussed. The interest earned is in your contract. And of course, the principal and interest paid during the time does bring that mortgage pay down a bit, making this, of course, the return that we discussed, the 43% total, 23% IRR.
As the investor, are you still entitled to the HST rebate typical to a residential new build if this is an investment property?
The answer is no, because it is not a residential investment, and there is no residential rebate to be had. The full and complete 13% is applicable to all commercial purchases. No matter how much I want to, I will not touch on HST matters. If you are looking for some guidance, I will tell you to speak to your accountant for a potential HST flow through, but that's as far as I will take it, because I can lose my license for speaking to things that I'm not certified to speak to. And in this case, we have, again, over 55 people who came in tonight. So I am respectfully telling you, ask your accountant. If you want questions to ask, I'm happy to tell you those. But I cannot give advice to HST. But you will not pay any further. The full 13% is included in the purchase price.
Well handled, sir. I appreciate that.
I try. It comes up every time. It's every time.
Every time. We have a question for HarbourLife. Is it private senior living or assisted living or others?
It is absolutely private senior living. This is a state-of-the-art facility that will be the premium and best facility in all of Hamilton, hands down.
I have a question here. Is it possible to get a recording of the presentation?
The answer
yes.
is absolutely yes.
I will personally be taking care of that. So everybody registered tonight with an email address, your first and last names. I've collected all of those things, and I will have this out to you tomorrow at some point, as well as access to a Google Drive with all of the documentation and more that you've seen tonight.
Yes, and if you were invited by your broker and they shared a link with you, your broker will be getting it, and they will be forwarding to you for your review. So every single person who's here tonight will be getting a copy of and having the opportunity to look at our mugs again, explaining this investment.
I don't know why somebody would want a recording of me droning on over a pro forma, but hey, I'm now flattered.
Maybe there's more people who love numbers as much as we do.
Perhaps. This sheet shows 18 months. I thought I heard you say it was a 12-month exit. So yeah. Please let me address that one.
Sure.
At 18 months post your buy or pre your buyback, okay? At, where do I have it here? Approximately 30 months from today is when occupancy begins, but there is no traditional occupancy period on this particular investment. So during what we would have as a traditional occupancy investment, like during an investment, is when the operator is going to come in and place a tenant. Okay? They're going to use that amount of time as a run-up to stabilize the building. You, as the investor, only require a mortgage for approximately 12 months. So we're going to alert you to when your occupancy period begins when the operator, LifeWise and Comfort of Living, are going to place a tenant. But then you would be on the clock 6 months after that or so to get the mortgage, and then 12 months after that. So we've said 18 months to give you that nice long run up to understand the investment, but it is 1 year or so with the mortgage itself. Hussein has asked, can I buy on behalf of my corporation, CMOS?
The answer, I did touch on it a little bit earlier, Hussein. The answer is yes, you can buy with your corporation. A name, a breathing, living human being does have to be on there to secure a unit. So Hussein, you would be on the agreement with your 123 Ontario Inc. And then at the end, again, you are able to give your lawyer a direction of title and close with whoever it is you need to close with, whether it's you or your company. But the answer is yes, it can be done, but your name must be on the agreement as well. Just because we're on that topic, for those who are wondering, can I buy 2, can I buy 5, can I buy 10 units? The answer is you can buy up to 2 units in your name, exactly the same as a residential condominium tower. The risk is weighed equally, where they will only put up to 2 units in each person's name.
Hussein has just said, thank you for your response. It's our pleasure. Do we need to get a mortgage approval right now or in 2023 when closing this purchase?
You will, oh, sorry, go ahead.
No. Well, you will need a mortgage pre-approval today. We're not in the same room. This is almost impossible.
I love COVID. I love COVID. The answer is yes, you will need a commercial mortgage pre-approval. And as Bobby mentioned a few times already, we are looking to hone down to give it to someone exclusively, so none of you have to be running around getting different answers, etc. So we're trying to streamline the process. I'm hoping by the time we do get to the agreements over the next 5 to 7 days, everybody is going to be doing the reservation forms and trying to meet the qualifiers, etc. But when we get there, we hope to have someone streamlined and easy for you to get your financing needs.
Just real quickly again, because it's popped up in a couple of different places. Is the total appreciation percentage adjusted if the project is delayed? Is a good question.
It's a great question, and the answer is absolutely yes. But it's going to be delayed. So let's talk about delay. If it's a delay because of construction, the answer is no. So I have had this conversation. This may be in your agreement. It'll be only if it is the fault of them not being able to close. So if they can close within 12 months of your purchase and they express the interest to do so, your return will not be diluted. But if construction or pandemics or anything else, it's just like any other condo. There's forces that they don't control either. So they have every intention to get to the date because they only profit when they actually exit you. So the quicker they get you out is when they actually profit. They are motivated and driven to close as early as possible, not as late as possible. But just to be absolutely clear, and this is something that I'm working on putting to the contract in writing, that post-close, any time period is going to be on their shoulders to carry. So please let me know if I answer that clearly, because that's an important question and a very good question, a smart question.
Very good. I did mention earlier, Simeon, that that 3.5% mortgage at 75% LTV, right, on a 25-year AM. I said 5-year term, and we have some questions about why 5-year, not 1 year, based on mortgage breakage and other things.
Yeah, so that may have been a mistake on your part or not. Just from my perspective, I would do an open term, to be honest, so I incur no fees, or at least a 12-month term. So I don't know if that was something that you said because we say it so often, or if you had a meaning towards it, please by all means expand on it.
No, I think that I'm just in the habit of saying such a thing. So Mark caught it, and good. Mark, well done. I appreciate it.
Good. So now I'm not the only person slapping you around.
There it is. It happens to me all day, every day. I love it.
God bless you, Bobby. Thank you. And thanks to Mark for catching that, because somebody else could have been thinking it and not said something. So that's a great point. Thank you, Mark. In all honesty, it should be either an open term or a 12-month max with the ability to extend 3 to 6 months. But we're going to have those conversations with all the people that we get into contract. But that's a great question again.
There is a question here about side-by-side units with a lock-off option. I'd love to live in one and rent out the other. Can you touch on that quickly?
Nobody here is living anywhere. The only way to live in this building is if 6 months prior to occupancy, you're driving in Hamilton, you see the big sign that says leasing now, or accepting residence applications now, you can make an application. If you're one of the buyers, I'm sure we could take you through the back door and say to the developer, like the buyer wants to live in his unit, but you have no advantage. You're paying what you're paying because it's a business. So it's not somewhere where people do credit checks and do we get them in? Like they literally tie residents to their bank accounts, and it's a way of living. It's not a regular condominium. Nobody's living here. If you need to put someone in because you have someone who's going to retire in Hamilton, let us know. We'll make the introductions, and I'm sure we could get in a word for you where you can make that happen. But it wouldn't be under the premise that they're living in your unit.
Exactly. I'm going to finish off with just 2 last questions, Simos. I love these 2 questions, both
get them all. If there's more, I'm happy to answer them all.
I actually think that we've answered a majority of them. I'd like to address Mark again. Mark hit us up in the chat asking us to flash the ROI up again. So I'll share the screen real quickly if we're good with that. Back to the pro forma, you'll notice that ROI is on the right-hand side. Total investment return, IRR is down the bottom left, and that's where that would go. As we've mentioned before, as we finish this, I'm going to then email everybody tomorrow morning, everybody that's joined this, or your broker will, and they will have access to this very document so that you can then go in depth with it. Okay, I hope that was a long enough flash up there. I just like to see Simeon's head in a larger format on my end. It just makes this more personal for me. Simos, 2 of the best questions from the same person here. Pindi has asked, is it better to buy cash or get a mortgage? Pros and cons of each. I love this investor question.
Yeah. So I mean, this is a question on investment, not specifically to this project, because you can ask this question to any investment. And the answer is, it depends who you are, first and foremost. But is there a benefit to using other people's money to make money? The answer is yes. For anybody who thinks paying for this cash is the best thing ever, you're wrong. Paying for this cash will generate you 3.5% of interest. Like that whole payment will be cash in your pocket. But it's exactly that. It's 3.5%. So it's dollar for dollar. When you leverage this thing and you put 100 and you take out 45 and you put it over 3 years and it becomes 23%, you are literally taking advantage of leverage in 2-3 different ways. So you're using time, you're using a breakup of the capital, so it becomes less capital intensive. So if you are looking for my personal advice on using leverage or mortgages for investing, I'm a massive proponent on it. I've built my entire real estate portfolio based on playing with leverage and using the advantages of the Canadian lending system to make a significant profit. So personal advice is mortgage. Objectional and professional advice would be depends on who you are.
Yeah, it's so well said. As an investor from a 35,000-foot view, I would say the less of your own money in the deal, as I mentioned once already before, right, it is best unless that isn't your situation, in which case you have to do what's right for yourself. So I love that answer. I love that question just in general. I think we've now got a new question, Simeon. Can you please provide some information on US investors wanting to invest at HarbourLife?
I honestly don't know what the requirements are. I know there is ways. So there are vehicles that you can use. It would have to be a Canadian structure for certain, just like for Canadians going to the US, we have to create a US structure. Whoever asked that question, if you are looking for a referral to a competent accounting firm, I'm happy to make one, or ask your broker if you were invited here to make that kind of referral. I'm just not qualified or well versed enough in that, in US to Canada investing to give comment. I apologize.
Yeah. I think that we've touched on just about everything else. And sorry, another new one. During the buyback, what would be the buyback price? Caveat, would it be buyback plus HST, or would it be just buyback price that you showed?
Buyback price. So you pay HST when you're buying. So whatever it is they do, that's going to be on them. There is no HST component or liability to you.
Right.
So
my next and the last favorite question comes from Pindy once again. Simos says, are you investing in this, Simeon?
I have invested in multiple ways into this project. I had a lot to do with the site sourcing. I had a lot to do with the structure of the entire organization. And the answer to, am I investing the way you are today? The answer is absolutely yes. I am going to be purchasing one or more retail units.
Yeah, again, I just love to touch on it because the comparison is so very simple. If we break it down in investor terms, it's a pre-construction investment on one end and a rent to own with another, except that on the pre-construction side, you have mitigated market forces by making a commercial investment so that you're not subject to the ebbs and flows of what the government can do, what individuals can do, what migration can do, what a pandemic can do, in theory. On the other side of that, you're working on a rent to own. And instead of working with, and I say this lovingly, but like Joe Blow with poor credit, who may or may not be able to fulfill upon their end of the agreement to buy through, we're working with an asset manager that fully intends to do so and is a multi-million-dollar corporation. So what you're actually doing is plugging a hole in your portfolio, which is exactly why I'll be investing as well. This isn't a residential pre-construction purchase. It isn't a rent to own, or for that matter, a duplex, triplex, something farther down the line. This is very simply put, a fixed return in your portfolio that mitigates many, many risks associated with real estate normally, but also then fulfills on the security that real estate commonly provides. Yeah. That's why I will also be investing. Simeon, you were wonderful tonight. I'm glad to see your glasses on. You look very handsome again.
I keep taking them off, and every time by the end of the night, my eyes are red, scratchy, and I'm supposed to wear them all the time. But Bobby, is that it for the questions, my man?
That's it. We are good to go.
Okay, so I want to take a quick moment to thank every single person for choosing to spend your time with us here tonight and taking the time to, of course, educate yourself and further the interests of your portfolio. I genuinely hope that I have been of value to you. I hope that Bobby has been of value to you. He's a very valuable piece of my organization. I respect him as a friend and as a colleague, and for the countless hours that he puts in to better our broker community, to better portfolios. He's been doing this for years. And I just a huge heartfelt thank you from the bottom of my heart for choosing to be with us tonight.
Yeah, thank you to everybody for trusting us. I think that it speaks volumes that your brokers also trust Simeon in this way, to let us speak directly to you about what is something new and valuable in the marketplace for your portfolio. There was another question quickly. We don't currently have a preferred list of brokers or lenders in order to fulfill upon an investment like this, but we are working on it. All right. So once we know everything that we need to know about financing in that regard, we will reach out, or your broker will, because we'll be reaching out to your broker. So please, from the bottom of our hearts, thank you for joining us this evening. Please reach out to your broker or to us directly if that's how you came into this this webinar. And we'll see you soon. And good luck with your next investment at HarbourLife.
Everybody be good and stay safe. We'll see you soon. Thank you.
Take care, you guys.